Welcome back to Squawk on the Street. Real estate, one of the worst performing sectors this year, but as mortgage rates begin to fall and investors get ready for potential rate cuts ahead, is the sector worth a look? Our next guest top pick in the space is Builders FirstSource. He also likes Cavco and says to watch Toll Brothers, which reports after the bell tomorrow. Jay McCanless, Wedbush Senior Vice President of Equity Research, joins us now. Jay, why are these some of your top picks?
Sure. So thanks for having me on Builders FirstSource. You get the ability to play single-family starts potentially moving higher. They are one of the largest companies in the building product space. And we think at this point, whether you're looking at single-family for sale or single-family for rent, Builders FirstSource is going to be one of the premier suppliers in the country to them, to the people who are building those homes, whether for rent or for sale. For Cavco, that's a manufactured housing name, providing a smaller ticket house in these days when affordability is really stretched, and also with a pristine balance sheet. We think are some reasons to take a look at that one. And then you're right, Toll Brothers is going to report tomorrow after the bell. We're neutral rated on that name. Little cautious on orders relative to consensus. Longer term, we like the stick builders. We do think there is a dearth of housing in this country, but near term, we've been concerned about excess inventories, especially for the entry-level builders.
Do you think that the prospect of a rate cut is already priced into these names, or do you see a potential upside if indeed there are cuts to come throughout the remainder of the year?
Not sure about a rate cut being priced in, but I would say that mortgage rates have finally started to work down a little bit. Certainly, right now, again, with affordability being stretched, with house prices continuing to march higher, mortgage rates having come in a little bit, certainly not back to the levels we were seeing 2 or 3 years ago. Any little bit will help at this point. But yeah, I think some of the moves we've seen in the stocks would imply that people think mortgage rates might be moving lower from here. We've had the view since the beginning of the year that rates probably wouldn't do very much, and been somewhat right, I would say. Mortgage rates today are I think like 6 5/8 is the last I saw. So really haven't gotten much help since the beginning of the year, but we'll see where they go going into the fall.
Jay, what's the trend right now on land costs, development costs? I mean, the lumber's been fairly constructive, right? Net?
Yep, has been. Lumber and labor have been helpful, but land costs, we continue to hear from the builders that anywhere from a mid-single-digit percentage gain to 20% plus, depending on which builder you're talking about. That's been a consistent headwind to gross margin growth for this group, and I don't see that changing anytime soon.
All right. Jay, thank you very much. Appreciate it.